In this video, we will talk about Central Bank Digital Currencies, CBDCs. So make sure to watch the full video. In the ever-evolving landscape of finance and technology, one concept that has garnered significant attention and speculation is Central Bank Digital Currencies, CBDCs. As the world becomes increasingly digital, many central banks are exploring the development and implementation of their digital currencies. This video aims to provide an in-depth exploration of CBDCs, covering their definition, motivations, implications, and potential impact on the global financial system. Understanding CBDCs. A central bank digital currency, CBDCs, is a digital form of a nation's currency, issued and regulated by the central bank. Unlike cryptocurrencies such as Bitcoin or Ethereum, CBDCs are a centralized digital currency, offering a digital representation of the official currency of a country. They are considered legal tender and share the same status as physical banknotes and coins issued by the central bank. The key feature of CBDCs is that they are issued and regulated by the central bank, making them a form of digital cash that is secure, trustworthy, and backed by the full faith and credit of the government. These digital currencies can be used for various transactions, including purchases, payments, and settlements, making them a potential alternative to physical cash and a complement to existing forms of money. Motivations for CBDCs. Central banks worldwide are exploring the potential benefits and motivations for developing CBDCs. Some of the primary drivers behind this exploration include 1. Financial inclusion. CBDCs have the potential to enhance financial inclusion by providing access to banking and payment services for individuals who are underserved or excluded from traditional banking systems. They can help bridge the gap between the unbanked and the broader financial system, fostering economic participation. 2. Payment efficiency. CBDCs can streamline payment systems, making transactions faster and more cost-effective. They offer the possibility of near-instantaneous settlement, reducing the need for intermediaries and decreasing transaction costs. 3. Monetary policy implementation. Central banks can use CBDCs as a tool to implement monetary policy more effectively. By providing direct access to their own digital currency, central banks can influence interest rates, control money supply, and respond to economic conditions swiftly. 4. Regulatory oversight. CBDCs allow for greater transparency and regulatory control over financial transactions. Central banks can track money flows, monitor illicit activities, and ensure compliance with financial regulations, reducing the risk of financial crimes. 5. Reducing dependence on cash. As society becomes increasingly cashless, central banks aim to offer a secure and regulated digital alternative to physical cash. This can help manage the decline of cash usage and reduce the cost of cash production and distribution. Implications of CBDCs. The development and issuance of CBDCs carries several far-reaching implications, both for the financial system and society as a whole. 1. Traditional banking. CBDCs could potentially impact the traditional banking sector. If individuals and businesses can hold CBDCs directly with the central bank, it may reduce the need for traditional bank accounts. Banks may need to adapt their business models to remain relevant. 2. Privacy concerns. The use of CBDCs raises privacy concerns. Central banks would have access to transaction data, which could be seen as invasive. Striking the right balance between privacy and regulatory oversight is a challenge that central banks must address. 3. Technological infrastructure. The implementation of CBDCs requires advanced technological infrastructure, including blockchain or distributed ledger technology. Central banks must invest in these systems, which can be costly and complex. 4. International impact. The introduction of CBDCs by one nation can have international repercussions. It may affect cross-border trade, foreign exchange markets, and global monetary dynamics. Coordination and cooperation among central banks are essential to manage potential international effects. 5. Cybersecurity. CBDCs are vulnerable to cyber threats, and central banks must invest heavily in cybersecurity measures to protect the digital currency and the financial system from attacks. A global perspective on CBDCs. Central banks worldwide are at different stages of exploring and developing CBDCs. Notable examples include 1. China. China has been a frontrunner in the development of its digital currency, known as the Digital Currency Electronic Payment (DCEP). The People's Bank of China has been conducting extensive trials and pilot programs to test the digital yuan's feasibility and functionality. 2. Sweden. The Riksbank, Sweden's central bank, has been studying the potential issuance of an e-krona to address the declining use of cash and digitalized payments. 3. The European Union. The European Central Bank, ECB, has been actively researching the potential issuance of a digital euro, considering the implications for the Eurozone. 4. The United States. The United States Federal Reserve is exploring the possibility of a digital dollar, with multiple research and pilot programs underway. 5. Other nations. Many other countries, such as Japan, South Korea, and the United Kingdom, are also examining the development of their CBDCs. The future of CBDCs. The road to widespread CBDCs adoption is complex and multifaceted. There are numerous technical, regulatory, and societal challenges to overcome. However, the potential benefits are substantial. If successful, CBDCs could revolutionize the way we think about money and payments. Here are some possible future scenarios. 1. A hybrid financial system. CBDCs may coexist with traditional bank deposits and other forms of money, forming a hybrid financial system. This system could offer users a choice between physical cash, digital bank deposits, and CBDCs. 2. Enhanced financial inclusion. The use of CBDCs may significantly enhance financial inclusion, giving everyone access to secure and efficient payment services. 3. Improved cross-border payments. CBDCs could simplify cross-border transactions and reduce the costs associated with international trade and remittances. 4. Economic stimulus. During economic crisis, central banks could distribute CBDCs directly to citizens, providing immediate and targeted economic stimulus. 5. Fintech innovation. The development of CBDCs may spur fintech innovation as entrepreneurs explore new applications and services built on top of this digital currency. Central bank digital currencies represent a bold and transformative step into the future of finance. While their implementation is complex and fraught with challenges, their potential to redefine the way we handle money, payments, and financial transactions is undeniably significant. As central banks worldwide continue to explore and develop their CBDCs, the financial landscape is poised for a digital revolution. The outcomes of these endeavors will have profound implications for the global economy, monetary policy, financial services, and individual financial freedom. We stand at the threshold of a new era in finance, where digital currencies issued and regulated by central banks may reshape the way we interact with money in the digital age. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.